Hey everyone, and welcome. Today we're doing a deep dive on something that affects us all,
Absolutely. It's a big one.
health insurance.
Yeah.
Specifically, we're going to be looking at excerpts from a document focused on health insurance policy provisions. You know, those crucial details that tell us what our insurance covers or doesn't.
Like the fine print.
Exactly. And we're going to try to decode that fine print for you so you can feel more confident when dealing with insurance. Because let's be honest, it can be pretty confusing sometimes.
Insurance can be a bit of a maze, that's for sure.
But this deep dive is like your cheat sheet, you know?
Your guide.
Exactly. Your guide to navigating that maze. And we'll be uncovering some really interesting things along the way. For example, did you know there are certain clauses in your policy that can actually protect you from surprise cancellations?
Yeah, a lot of people don't realize that.
Or that changing careers could have an impact on your premiums?
It's true. Your job can actually affect your insurance rates.
We'll be getting into all that and more, right?
Yeah, absolutely. We'll be breaking it all down.
Now, I understand there's an organization working behind the scenes to try and standardize policies across different states and insurance companies.
That's right. It's called the NAIC, the National Association of Insurance Commissioners.
Okay, so the NAIC are like the rule makers for the insurance world.
Exactly. They create these model provisions that act like a blueprint for health insurance policies. And our source material actually mentions 12 mandatory provisions and 11 optional ones.
Oh, wow. So a lot of companies actually adopt these provisions.
Many do, yes. And these provisions are really important because they help ensure a level playing field for everyone, regardless of which company you're insured with.
That makes a lot of sense. So it brings some order to what could otherwise be a very chaotic system.
Definitely. It helps to streamline things and make sure everyone is operating under a similar set of rules.
So out of these provisions, which ones are the real game changers? The ones everyone should absolutely know about?
Well, let's start with a few of the mandatory ones, like the entire contract clause, for instance.
Entire contract.
Sometimes you'll see it referred to as WISE IYG in your policy documents.
WISE IYG.
Yeah, it stands for what you see is what you get.
Ah, so it's all about transparency, right? Making sure the insurance company sticks to the terms laid out in the policy.
Precisely. Think of it as a safeguard against any hidden surprises or sudden changes in your coverage.
Okay, so everything's clearly stated up front, no backroom deals or shifting goalposts.
Exactly. What you see is what you get. It's all right there in the contract.
That definitely brings a sense of security. What about this time limit on certain defenses, also known as the incontestability clause? It sounds pretty serious.
It is. This provision essentially states that after a certain period, usually 3 years, the insurance company can't contest your policy, except in cases of fraud, of course.
So let's say there was a minor health issue I overlook when applying for the policy. After those 3 years, they can't use that against me to deny a claim.
That's right. It prevents insurance companies from digging up old issues to avoid paying legitimate claims.
It puts a time limit on their ability to challenge your coverage.
Precisely.
That's a relief.
Yeah.
Okay, let's talk about the grace period. I'm guessing this gives you a bit of breathing room when it comes to paying premiums.
You got it. Life happens, things get busy, and sometimes we forget to pay bills on time.
Happens to the best of us.
The grace period acts like a safety net, allowing you a certain amount of time to catch up on those premiums without losing your coverage.
So even if I'm a bit late with a payment, my coverage won't automatically lapse.
Exactly. Now, the length of that grace period depends on how often you pay your premiums.
Yeah.
Weekly, monthly, or whatever your schedule is. But it's good to know that there's a buffer built in.
Okay, that makes sense. But what happens if, for whatever reason, my policy does lapse? Is there any way to get it back?
There is. That's where the reinstatement provision comes in. It gives you a way to reactivate your policy if it lapses, although there are certain rules involved.
Of course, there are always rules.
Like, you'll need to pay any missed premiums and apply for reinstatement within a specific time frame, usually around 60 days.
So there's a window of opportunity to get back on track.
Mm-hmm.
But what if the insurance company, takes forever to process my reinstatement application? Do I just have to wait in limbo?
Actually, no. There's a really interesting safeguard built in.
Oh.
Our source material says that if the insurer doesn't respond to your reinstatement application within 45 days, your policy is automatically reinstated.
Oh, wow. So there's a system in place to prevent unnecessary delays. That's
Yeah.
great. Now let's move on to provisions related to claims. We have notice of claim, claim forms, and proof of loss.
Right.
These seem pretty straightforward, but are there any nuances we should be aware of?
Well, They are generally straightforward processes, but understanding the timelines involved is important.
Timelines, okay.
For example, with notice of claim, you're typically required to notify the insurer of a loss within 20 days of the incident, or as soon as possible.
There's a time frame to let them know a claim is coming. What about actually filing the claim?
So once you've notified them, the insurer has 15 days to provide you with the necessary claim forms.
Okay.
And then once you receive those forms, you have 90 days to submit the proof of loss documentation.
Which basically supports your claim.
Exactly.
So it's all about following a process. But at least the timelines are clearly defined. Now, what about getting paid for the claim? Is there a standard waiting period?
Well, here's where things get a little more reassuring for policyholders. The time of payment of claims provision generally requires insurers to pay most claims immediately after receiving the necessary proof.
Immediately.
Yes. Now, disability income claims are paid at least monthly, but for most other claims, it's immediate.
Oh, that's good to know. So no waiting around for months on end to receive that check?
Nope.
But what happens if there's a dispute with the insurance company regarding a claim?
Hopefully it doesn't come to that, but if it does, there is a provision that outlines how to handle legal actions. Typically, there's a 60-day waiting period before you can sue. And there's a 3-year statute of limitations for filing a lawsuit.
So there's a window of time to try and resolve things amicably,
Exactly.
but there's also a legal pathway if needed. All right, so we've covered a good chunk of those mandatory provisions. Before we move on to the optional ones, let's talk about a couple other really crucial ones that you highlighted. The free look and the insuring clause. What makes these stand out?
Well, these are really important provisions because they form the foundation of your agreement with the insurance company.
Oh, actually, okay.
The free look provision gives you a 10-day window after receiving your policy to review it thoroughly.
Okay.
And if you find something you're not comfortable with, you can return it for a full refund, no questions asked.
It's like a test drive for your insurance policy.
Exactly. It gives you peace of mind knowing you have a chance to carefully evaluate the policy and make sure it aligns with your needs.
I like that. A test drive. Now, the insuring clause, you said, is kind of like the heartbeat of the contract.
In a way, yes. This clause outlines the core promises the insurance company is making, the benefits they'll provide, and the specific circumstances under which those benefits are payable. It's the essence of the agreement.
So it's basically saying, this is what we agreed to do for you under these terms.
Precisely. It lays the groundwork for the entire relationship between you and the insurance company.
Like establishing the ground rules right from the start. Okay, that makes sense. Now, we've talked about those essential free look and insuring clause provisions, along with several of the mandatory ones. But before we move on to the optional provisions, let's delve in something you mentioned earlier that I think a lot of people can relate to, and that's the change of occupation provision. Why is this one particularly important?
Well, this provision is particularly relevant because it affects how your benefits or premiums might change if you decide to switch careers.
Oh, okay.
And let's face it, career changes are becoming more common these days.
Yeah, for sure. So if I decide to make a drastic career move, let's say going from an office job to something more physically demanding, what kind of impact could that have on my health insurance?
Well, if you transition to a job with a higher risk profile, like construction or something involving heavy machinery, you might see your premiums increase.
Because the insurance company is now taking on a higher level of risk.
Exactly.
That makes sense from their perspective.
Yeah.
But it's definitely something to consider when making career decisions. On the flip side, I imagine moving to a lower risk job could potentially lower premiums.
That's right. If you transition to a less physically demanding job, you might see your premiums decrease.
So there's a financial incentive for making healthier career choices, I guess.
In a way, yes.
Now let's move on to another optional provision that caught my eye. Misstatement of age. Why is accuracy so crucial when it comes to stating your age on a health insurance application?
Well, honesty is always the best policy, especially when it comes to insurance. If you misrepresent your age, even slightly, the insurance company has the right to adjust your benefits accordingly.
So those little white lies about shaving off a few years could come back to haunt you.
Absolutely. Your age plays a significant role in determining your premium rates. So providing accurate information is essential to ensure that you're getting the appropriate coverage and paying the correct premium.
It's about being upfront and transparent to avoid complications down the road. Now, one last optional provision before we wrap up this part of our deep dive, and that's cancellation. This one seems like it's in favor of the policyholder.
It is. A lot of people are relieved to know that this provision, which allows insurance companies to just arbitrarily cancel your policy, is actually prohibited in most states.
Really? So as long as I'm paying my premiums on time, my coverage is secure.
Exactly. You can have peace of mind knowing that the insurance company can't just decide to drop your coverage without a valid reason.
Wow, that's definitely reassuring. So we've covered a lot of ground already.
We have.
From those mandatory provisions like the entire contract and incontestability clauses to important concepts like the grace period and reinstatement.
Right.
We also explore the free look and the insuring clause, which are key to understanding the foundation of your agreement with the insurance company. And we even touched upon how career changes can impact your coverage with the change of occupation provision.
It's a lot to digest, but understanding these key elements can really empower you to make more informed decisions about your health insurance coverage.
Yeah, absolutely. But this is just the tip of the iceberg, right?
Yeah.
We still have more provisions to unpack,
Oh, there's more.
including some crucial ones that can significantly impact your coverage and peace of mind in the long run.
That's right. We'll be diving deeper into the world of renewability provisions, exploring the intricacies of policy exclusions and other essential elements that everyone should be aware of.
So stay tuned, because this deep dive is just getting started. All right, welcome back to our deep dive into health insurance policy provisions. We've covered a lot of ground already, but as we know, there's always more to learn when it comes to this stuff.
It can be pretty dense, that's for sure, but it's important to understand what you're signing up for.
Exactly. And now we're moving into an area that's particularly crucial for your long-term security.
That's right. We're talking renewability provisions.
Okay, so we're talking about what happens to my policy over time. Why is this such a big deal? I mean, as long as I keep paying my premiums, I'm covered.
Well, it's not quite that simple. Renewability provisions actually dictate how much control you have over your coverage as time goes on,
Interesting.
and they can really impact your peace of mind, especially if you, say, develop a health condition down the line.
That makes sense. So it's not just about maintaining coverage, but about the terms of that coverage staying consistent.
Exactly.
Can you walk me through the different types of renewability provisions?
Absolutely. Let's start with the most secure option, the gold standard, if you will.
Oh, lay it on me.
Non-cancelable policies.
Non-cancelable. That sounds pretty straightforward.
It is. With a non-cancelable policy, the insurer is locked in. As long as you pay your premiums, they can't cancel your policy, they can't modify the terms, and they can't increase the premium. It's the ultimate peace of mind.
Wow. So it's like having a lifetime guarantee on your health insurance.
In a way, yes. It offers the highest level of protection. But of course, this level of security comes with a price tag. Non-cancelable policies are generally the most expensive.
Makes sense. You get what you pay for. So what's the next best thing if, non-cancelables is out of my budget?
Well, the next level down is guaranteed renewable, and it's still a great option.
Okay.
Like with non-cancelable policies, the insurer can't terminate your coverage as long as you pay your premiums.
So still pretty secure.
Yes, but there is a key difference. With guaranteed renewable policies, the insurer can increase premiums, but only on a class basis.
Class basis. What does that mean?
It means they can't single you out for a premium increase.
Oh,
If premiums go up, they go up for everyone in a certain category, like all nurses in your state or all teachers in a certain age bracket. It's not tied to your individual health status or claims history.
got it. So it spreads the risk across a larger group.
Exactly.
Okay, that seems fair. So guaranteed renewable offers a good balance between security and affordability.
Exactly.
What are the other types of renewability provisions?
Well, we have conditionally renewable policies
Conditionally?
where the insurer has a bit more leeway. They can choose not to renew your policy under certain specific conditions.
So there are some caveats with this one. What kind of conditions are we talking about?
It could be things like reaching a certain age outlined in the policy, losing your job, or moving out of the insurer's service area. It really depends on the terms.
So you really have to read the fine print carefully with this one.
You do.
Okay, what's next?
Then we have optionally renewable, which, as the name suggests, gives the insurer a lot more flexibility. They essentially have the option to renew your policy or not at the end of each term, and they can also increase premiums.
That doesn't sound very secure at all.
It's definitely the least secure option on the spectrum. It doesn't offer much long-term stability. You're essentially at the mercy of the insurer's decision each year.
Yeah, that's a little unnerving. So that's more of a short-term solution.
Exactly. It's not ideal for people who are looking for predictable and consistent coverage over the long haul.
Got it. And finally,
Finally, we have non-renewable policies, which are specifically designed for short-term coverage, and cancelable policies, which are pretty rare these days, and allow either party to cancel with notice.
Wow, it's quite a range of options. So when I'm shopping for health insurance, renewability is definitely a key factor to consider, right alongside the premium cost and the benefits offered.
Absolutely. It's crucial to understand what you're signing up for when it comes to long-term coverage. Now, speaking of things that can impact your coverage, let's move on to an area that might not be as exciting, but is equally important.
Okay, hit me.
Policy exclusions, limits, and restrictions.
Okay, so this is where we get into the nitty-gritty of what's actually covered and what's not.
Mhm.
I have a feeling this is where some surprises might pop up.
You're right. It's essential to be aware of these exclusions because they can really impact your coverage, especially in unexpected situations. Our source material highlights several common exclusions that you should be aware of.
Like what?
Well, for example, most policies will exclude coverage for injuries resulting from acts of war,
Okay, that makes sense.
self-inflicted injuries,
Right.
or injuries sustained while piloting an aircraft.
So if I decide to take up skydiving as a hobby, I might want to reconsider my options.
It's definitely something to think about. And there are other exclusions as well, like those related to losses resulting from illegal activities or those that occur outside of the insurer's coverage area.
So it's all about understanding the boundaries of your coverage.
Exactly.
But why do these exclusions exist in the first place?
Well, it all comes down to risk management for the insurance company. They need to set limits on their exposure to certain types of high-risk events in order to keep premiums affordable for everyone.
That makes sense. It's a balancing act
It is.
between providing coverage and managing those financial risks.
Precisely. And speaking of managing risk, let's move on to another important provision, the probationary period. This one can be a bit tricky.
What makes it so trippy?
Well, the probationary period, which is typically around 30 days, only applies to illnesses that arise during that initial period after you enroll in the policy. It doesn't apply to accidents.
So if I break my leg on day 1 of my coverage, I'm good. But if I come down with the flu on day 5, I might not be.
That's the general idea. The rationale behind this provision is to prevent people from, signing up for insurance only when they know they're about to need it.
Oh, so it's a safeguard against opportunistic enrollment.
Exactly. It's about ensuring that the system is fair for everyone and that people aren't just using insurance as a reactive measure.
Okay, that makes sense. It's about promoting responsible enrollment and preventing abuse. What about pre-existing conditions?
Right.
I know this is a topic that can be, confusing and sometimes even worrisome for people.
Absolutely. It's a complex issue. And this is where the pre-existing condition provision and the impairment rider come into play.
Can you break those down for me? I'm not entirely sure what they mean.
Of course. So the pre-existing condition provision is essentially designed to protect the insurer from having to cover health conditions that existed before your policy started.
So if I have a chronic illness that I don't disclose and then later need treatment for that condition, the insurer could deny coverage.
That's a possibility, yes. However, it's important to note that the Affordable Care Act has placed significant limitations on how insurers can handle pre-existing conditions. They can no longer deny coverage outright based on a pre-existing condition.
Okay, so that's a positive step
It is.
towards protecting people with pre-existing conditions.
Mm.
But what about the impairment rider you mentioned? How does that work?
So the impairment rider is typically used when you have a pre-existing condition that you disclose upfront to the insurer.
So transparency is key here.
Absolutely. When you're upfront about your health history, the insurer can offer coverage, but they might include an impairment rider that outlines specific limitations or exclusions related to that pre-existing condition.
So it's a way to provide coverage while still managing the risk associated with that specific condition.
Exactly. It's about finding a balance that works for both parties. And it highlights the importance of honesty and transparency.
Yeah, honesty is the best policy,
It really is.
especially when it comes to insurance. Okay, so we've covered a lot of ground here, from the various types of renewability provisions to those tricky exclusions and the complexities of pre-existing conditions. What's next?
Well, we've talked about what's covered and what's not, but now let's delve into a crucial aspect of health insurance that often gets overlooked.
Okay, I'm intrigued.
Beneficiary designations.
Beneficiary designations. Isn't that something you usually deal with for life insurance policies?
It's common for life insurance, yes, but it's also relevant for health insurance, especially if your policy includes a death benefit.
Oh, I hadn't really thought about that.
Yeah, it's something a lot of people overlook.
So even with health insurance, I need to think about Who would receive those benefits if something were to happen to me?
You do. It's essential to designate beneficiaries for any potential death benefits associated with your policy.
And just like with life insurance, you have options.
Right. You can designate individual beneficiaries or even a class of beneficiaries like your children.
So it's all about ensuring that those benefits are directed to the right people. Are there any other important considerations when it comes to beneficiaries?
Well, the policy will typically outline the order of succession.
Oh, okay.
In case the primary beneficiary passes away before you, this ensures that there's a clear plan in place.
That's good to know. It's all about having those details ironed out in advance.
It is.
Now, we've covered beneficiary designations. What about premium payments?
Right.
Are there any, strategies or insights to share?
Well, you have several options when it comes to how often you pay your premiums.
Okay.
Monthly, quarterly, semi-annually, or annually.
Right.
And the payment mode you choose can actually impact the overall cost of your insurance.
Really? So how do I choose the best option?
Well, paying annually is typically the most cost-effective.
Oh.
Because you're essentially paying in bulk.
So if I can swing it financially, paying once a year could save me money.
Exactly. It's like getting a discount for paying up front.
Good to know. Now, before we move on, are there any other important provisions we should touch on?
Yes, there are a couple more.
Okay.
For example, the reductions in coverage provision assures that your coverage amounts won't be arbitrarily reduced after you make a claim.
Oh, so I can't be penalized for actually using my insurance.
Exactly. You have the right to receive the benefits you're entitled to.
That's reassuring.
And the other one is the no loss, no gain provision. This one emphasizes that insurance is meant to indemnify you for a loss, not to create a profit.
So I can't get rich off my insurance policy. That's probably a good thing.
It is. It helps to maintain the integrity of the system. It ensures that insurance is used for its intended purpose to protect you from financial hardship.
Okay, so we've covered a lot of ground here, from renewability options and policy exclusions to beneficiary designations and the nuances of premium payments. It's clear there's a lot more to health insurance policies than meets the eye.
There's a lot to it. But the more you know, the better equipped you are.
Exactly. Knowledge is power. And as we head into the final part of our deep dive, we'll be tackling one more crucial area.
That's right. We have one more important topic to discuss.
Okay, I'm all ears. Okay, we're back for the final part of our deep dive into health insurance policy provisions, and I'm really curious about that last crucial area you mentioned. What is it?
It's something called coordination of benefits, and it comes into play when you're covered under multiple health insurance plans.
Okay, so if you have coverage through your employer and also through your spouse's plan,
Exactly.
how do you know which one to use?
Well, that's what this provision helps to clarify. It prevents you from receiving duplicate benefits for the same claim,
Okay.
and it establishes a clear order of payment. Essentially, it determines which plan is primary and which is secondary.
So it's like a pecking order for your insurance plans?
You could say that.
But how do they decide which plan takes the lead?
Well, there are a few factors. Often, if you're covered under both your own employer's plan and your spouse's plan, the plan of the person whose birthday comes first in the calendar year is usually designated as primary.
So if my birthday's in March and my partner's is in July, my plan would be the primary one.
That's right. But there can be other scenarios too, like if you're over 65 and have employer-sponsored coverage, Medicare might be secondary. It can get a bit intricate depending on your situation.
So it's not always a clear-cut answer.
Not always, no.
So it's important to understand the basics of this coordination of benefits thing.
Absolutely. That way, if you ever find yourself in a situation with multiple plans, you'll be better equipped to navigate the claims process and make sure you're maximizing your coverage.
It sounds like this provision is all about creating efficiency and avoiding headaches.
Exactly. No one wants to deal with the hassle of filing multiple claims and trying to figure out who pays what.
Right, exactly. And knowing how this provision works can potentially save you a lot of time and frustration.
It can.
Well, this has been incredibly insightful. We've covered so much ground, from those foundational mandatory provisions to the nuances of renewability and exclusions. We even touched on this often overlooked aspect of coordinating benefits. I feel like I have a much clearer understanding of how this all works.
That's great to hear. Remember, knowledge is power, especially when it comes to your healthcare. Don't be afraid to ask questions, read the fine print, and advocate for yourself.
Such valuable advice. Huge thank you to you for taking us on this deep dive. It's been truly enlightening.
It's been my pleasure.
And to you, our listeners, thank you for joining us. We hope this deep dive has empowered you to navigate the sometimes confusing world of health insurance. Until next time, stay curious, stay informed, and stay healthy.